Hey, good day, everyone. Good morning, good afternoon, good evening. I know we've got participants from many parts of the world. Uh, Very excited that you chose to spend the next hour with us and looking forward to driving what I believe is going to be a very engaging, very thoughtful discussion on our topic. The title of which is A Pragmatic Approach to Digitally Transforming Banking and Financial Services Operations. I do want to spend a second on stressing the term pragmatic uh, and also stressing the term operations, because I think that's what we are going to focus on in terms of our approach to our conversation today. Uh, in thinking about how to kick this off, I came across an article by somebody that I vaguely have known in my past, a gentleman called Amit Zaveri, who's the VP and head of platform at Google Cloud. And I'm going to quote him because it was extremely apt in my mind in terms of how to introduce this webinar today. And I'm going to quote, "Think of digital transformation less as a technology project to be finished than as a state of perpetual agility, always ready to evolve for whatever comes and customers want next, and you'll be pointed down the right path," right? And I thought that was so succinctly and thoughtfully articulated in terms of, boiling down the 5,000 definitions of digital transformation that are out there, right? In that context, since we are focusing on the broader financial services area, financial services is just an ocean, right? It's not just banking, it's not just mortgage, it's not just fintechs, it's not just credit cards, it's not just commercial loan. It is an ocean of processes, of products, of services, and literally intertwined in pretty much every single facet of our day-to-day lives. And therefore, it's going to be impossible for us to generalize what digital transformation means, right? Until and unless we actually double click into very specific areas. I'd like to reiterate the pragmatic element. As with any new term or as with any hype, if I may use that term, right? One tends to get locked into, broad definitions of bleeding edge technology. And really, at the end of the day, anything that we tend to do needs to be focused around what does it mean for the company's goals? What does it mean for that company's end customers? And whether it's a product or a service or an experience that you're offering in terms of how to continually improve that, right? So towards the end of this hour, what I think we want to take away from this, and as we jump into the conversation, and I'll introduce our wonderful panelists in just a moment, is truly, I think, is a view on how organizations and leaders think of the value of digital transformation as it stands across the broader financial services ecosystem. Okay? I'm going to jump straight into introducing our three incredible panelists. Very proud and privileged to have them partner with us here. I'll start with Ed Schreiber. Ed has over 42 years of financial services experience, from being a regulator for 19 years with the Office of the Comptroller of Currency, and then a chief risk officer for over 23 years with TD Bank and Zions Bancorporation. Ed also served on the Risk Management Association Board and Executive Committee, as well as being a chair of the RMA. He currently does some significant consulting work and currently serves on the board of a substantive community bank. Jeff Anderson, who's based in Dallas. Jeff carries 25 years of mortgage banking experience, serving in executive positions for both sales and operations. He currently serves as a chief operating officer at OnQ Financial, with responsibilities in supporting retail fulfillment, construction perm, credit risk, product development, and all of OnQ's strategic initiatives. In his current and previous roles, Jeff has been tasked with framing collaborative company culture, leadership development programs, and very pertinent to our theme today, process optimization. Coming to Matt Haslinger, Matt's based in Buffalo, New York. Matt has 17 years of experience in the financial crimes field and currently is the chief BSA, AML, and OFAC officer for M&T Bank in Buffalo, New York. In his role, Matt is responsible for the oversight, implementation, and strategic direction of M&T Bank's enterprise-wide programs for Bank Secrecy Act, anti-money laundering, and governmental sanctions compliance. Prior to joining M&T Bank, Matt was a senior trial attorney with the U.S. Department of Justice's Money Laundering and Bank Integrity Unit, where he was involved in the investigation and prosecution of highly complex national and global money laundering and sanctions-related matters. Matt is a certified anti-money laundering specialist and is a licensed attorney in Virginia and New York. With that, I'm going to launch straight into our conversation with our panelists. And panelists, welcome, and thanks to all of you for taking the time to be with us today. Ed, if you don't mind, I'm going to start off with you. And given your substantive experiences across enterprise risk management, spanning your time at the OCC and later in chief risk officer roles at TD and Zions, where do you identify the best areas for digital transformation across the enterprise risk management landscape, and why?
Well, thanks, and a great question to start off with, and I'd like to welcome everybody, but including the panelists here. I'm very happy to be with such two esteemed people here, so I greatly appreciate it. So the question, I'm going to start with a little bit of a twist on this one, because I'm a firm believer that if you talk about enterprise risk management and the program, you design a risk program to fit the bank, not vice versa. So depending on the risk profile of the company, right, then you need to figure out what's the risk program that's appropriate for that size and complexity, probably most importantly. Size, to some degree here, is neutral, right? People get caught up on this is a such and size, 80 billion, $200 billion company, and that might not matter. It depends on what they do and don't do. If there's international work, things get a little bit more complex, particularly depending on which countries they do or do not deal with. So I would take on two things. The greatest risk that faces a company, right, for a bank, I'll start with the bank and predominantly focus on a bank. There's a broker-dealer, and if it's just a straight mortgage company, there's some different things here. But for a bank, it's the credit space. And you already touched about customer. When all is said and done, you can have salespeople that are lenders. You could have the risk staff. But if you don't have customers, no, it doesn't matter. It becomes a moot point. So figuring out what's the optimum fit for the customer to digitize. So let's just talk about on the lending side, small business lending, which is probably presents itself as probably one of the best and maybe not easiest, but probably a nice practical way of applying digitization to it. I would look at that, but on the lending side in general, because from there, if we get this right, for the one, first and foremost for the customer, and then for the bank, then the risk staff then can design, right, appropriate oversight. And by oversight, that's just not monitoring for compliance. Where I really want to get to here is that if this is done right, then the stress testing that should be done by all banks, right, and any company for that matter, depending on what they're doing, becomes a lot easier, and you can design a stress test program, right, but take and leverage or optimize is probably the better term, the digitization that's been done. So I would start with credit, and then I probably start with small business and making sure that's done right. And then from a fair lending standpoint, from a pure credit perspective, there's a whole lot of things that can take place from a risk standpoint and design that around it. The next is on the deposit side of the house, which is really where the industry is trying to catch up to the fintech side of the house, right? The fintechs, I think, have advanced more on the credit side and definitely on the deposit side. And getting that from a BSA AML perspective, right? Monitoring from an interest rate risk perspective, if you can get this right, the leverage that can be had by applying risk techniques becomes vastly better, easier, and quite frankly, cheaper. And ultimately, risk is an overhead. People mean, for years I've said that, and people, even me in risk management, but recognizing the fact that you are overhead, right? Then how do you help minimize the overhead impact, right? And coming up with and leveraging technology is a mandatory deal here. Everybody wins from it, but it also makes you better at your job. The last thing, if I really focused on risk itself, and if it could be done, and I don't think it's been looked at, is a governance, risk, and control or compliance tools. The GRC tools that exist in the industry today, and I'm not going to name any of the companies that use them, but with that being said, I feel none of the tools that are available for GRC are at their optimum. That there is vast improvement that can be done. And if you get that right, and if it's digitized, then the capacity to communicate and move data and analyze it from a pure risk perspective would be just outstanding. So for me, you take on what's right for the bank and you design it, but the GRC tool is really more designed first and foremost for risk, but also users, right? Front end users from the line. But that's how I would look at it, and why it's about leveraging the systems, but more importantly, you're still overhead, and how do you optimize that, right? So you make it more streamlined and most likely far better effective.
Thank you, Ed. You've in just those remarks covered so many things across credit, deposit, risk in terms of being an overhead. Your comment about the translation from industry to fintechs, or legacy industry versus fintechs. I think that's interesting, and we'll likely come back to that later in the call. But I'm going to turn to Jeff. Jeff, in the context of, since you represent the mortgage side of the house, right, and what's happening in that space, in the context of the recent whiplash across that industry, we had an unprecedented boom in mortgages riding on the dual waves of extraordinarily low interest rates and a very surprising demand cycle for housing that was triggered by COVID. And now, on the flip side of that, a somewhat downward cycle, by the opposite forces, right? Rising, escalating interest rates, slowing demand. How does an organization like OnQ Financial think about digital transformation across your operations chain?
No, I like it. I'll start with a thank you for the kind remarks earlier. I trust you received that check in the mail. So well done, sir. Again, I think the question's interesting, and I laughably appreciate you using the word whiplash, because it over the last few years, it's certainly been a joyride, right? Yeah. You're dealing with those experiences where things are going fast, and then there's some quick braking, right? And I think that, a joyride really typifies the mortgage industry. So buckle up. I think relative to this digital transformation ideology, I would tell you that COVID unequivocally served as an accelerant to digital adoption. Consumers were disrupted, and to me, I would argue they were almost forced to embrace digital solutions. If you reflect back on many COVID experiences, think about home deliveries for from restaurants that may have traditionally been dine-in, that had to convert to support the home delivery process. Grocery delivery was, it wasn't a new concept, but it became more commonplace due to COVID. So just just using those as small examples to see how consumers began to embrace digital solutions kind of typifies the environment that the mortgage industry was faced with. And so I think as a consequence to that, most consumers have adopted the digital process, and to some extent, I would say invariably they expect it. And then I think exclusively from the mortgage fulfillment perspective, I would say that COVID necessitated that your end-to-end process had to be, or maybe become agile, like being able to be adaptable and respond to consumer needs given those COVID constraints. That was at a premium. And I would say not only were the core operational areas of sales, processing, underwriting, and closing affected, I would also argue that our third-party relationships were tested. They had to be utilized to fulfill a mortgage request, and so it was important that they had the appropriate setup to kind of endure that process. When you think about that, operationally speaking, I would say, fortunately, this process has allowed the digital solutions to be tested with the amount of volume that you alluded to earlier. That volume allowed us to expose those digital solutions in a way that we now, instead of the testing that's done, it allows us to point to pursuits to refine those digital concepts to ultimately improve the speed of getting customers a loan decision. And ultimately, I would tell you that the digital transformation's core objective is to shorten the amount of time it takes to tell a customer he or she is approved. So irrespective of the volume levels, I think that objective helps ensure we are delivering a remarkable customer experience. And that's what influences OnQ's intrigue and commitment toward a digital transformation.
Jeff, thank you very much. You know what just caught my attention? When Ed, responded to my earlier question, he made it very clear, right? It wasn't about size. It was about what's right for the institution and for the program. You mentioned the exact same thing in a different context. You talked about it wasn't about the volume. It was about that experience, right? In terms of the end customer experience. That's a theme I'd love to come back on. But I'd like to kind of invite Matt to address something that's important here as well, that we can weave into our broader discussion. Matt, at M&T Bank, and I have known your bank for a long time. I think it's one of the largest and arguably probably one of the best run super regional financial institutions in the country, right? You're at the helm of their BSA, AML, and OFAC program. Undoubtedly, reliable data and technology and infrastructure support are critical to successful financial crimes risk mitigation. In that context, how do you think of digital transformation in enabling your group's ability to continue to deliver world-class compliance to the bank at the volumes that you work with?
Yeah, thanks, Akhil. And I just want to first thank you for inviting me here today. And it's an honor to be on a panel with you and Ed and Jeff. I will say that I see digital transformation as really the key to helping banks and all financial institutions improve their customer experience. I think you heard that was sort of the denominator for both Ed and Jeff, is that we all have customers. I always say that BSA AML would be a lot easier if we didn't have customers. But that's unfortunately, we don't have that luxury. Obviously, as a financial institution, we need customers to generate revenue, right? So, but they're the denominator, and that should be the focus. And digital transformation can really help us attract new customers. It can help us simplify processes for existing customers. That customer centricity and improving the customer journey is really the core of everything we're doing right now at M&T Bank. In fact, just this past week, we just hired a new chief digital officer to help us drive the customer journey through digital transformation. And sometimes I lose sight of that when I'm, thinking about BSA AML operations. But that customer friction is really something that we should be focusing on. And when I think about digital transformation, I think about how can I reduce that customer friction. And it's also very important for me to think, though, around that same technology that's enhancing the customer experience is also transforming the way criminals, terrorist financiers, sanctioned individuals, how they obtain their money and how they move their money. It's making it easier now more than ever for criminals to disguise illegal activities such as fraud or money laundering or sanctions evasion. So naturally, I also need to take advantage of digital transformation to reimagine our risk-related business processes to keep up with the criminal element. So for me, digital transformation in the anti-money laundering space really boils down to two things. And I think Jeff and Ed touched on both of these, and that is efficiency and effectiveness. If you've been following around anti-money laundering legislation, AMLA 2020 came out 2 years back, and really the spirit of that legislation is around how to make the regulatory environment in AML more efficient and more effective. And with increasing regulatory complexity, we need to make sure we're taking advantage of every single resource that we have available to fight financial crime. And I think this concept is inherent in regulatory requirements to take a risk-based approach, right? I think there's a recognition by our supervisors that we don't have and won't ever have unlimited resources to address all financial crimes risks. So when I think of that digital transformation in AML, I think of better automated processes, more robust transaction monitoring with higher alert to SAR hit rates, leveraging big data and advanced analytics, all to focus on what Ed said, which is really taking advantage of the resources that you have available to you because you are a cost center. But all of these things create, efficiency, the leveraging big data, advanced analytics. It's allowing our analysts and our investigator to focus on what really matters the most, and that is what is most likely to result in a suspicious activity report. But it's also not just about efficiency, it's also about effectiveness. And the goal in AML is to provide highly useful information to law enforcement through those suspicious activity reports. And what I've seen from digital transformation is it's allowing us to provide more accurate information to law enforcement so we can better protect the bank, but also ultimately better protect the communities that we serve. That's what we're in the business of doing.
Thanks, Matt. You're articulating succinctly the efficiency and effectiveness combination, right? In the context of, as you called it, the common denominator in terms of what all of you experts are talking about, i.e. the end customer experience. I want to take that and I want to go off at a little bit of a tangent in terms of how an organization's vision accommodates that or allows to accommodate for some of these outcomes, right? And my question, and Ed, perhaps I'll direct this to you, is one point of failure that leaders often talk about is the translation of the vision and direction set by boards and the C-suite to actual execution of digital transformation programs and projects. What's your advice on how to bridge the vision to the execution gap, particularly given your vantage point in terms of the boards and C-suites of so many institutions, including from a regulatory standpoint as well?
Well, the question's an excellent one, and it's multifaceted in how you approach it. But if I cut down to some basics on the deal, first and foremost, in this space, people tend to bite off more than they can chew. You take on too many things. So under the the deal, you crawl before you walk, right? First and foremost, making sure what you're about to take on in the space you can handle, right? And there's not too many things in the air, because what you constantly hear, right, from in the roles that I've had is you still have to do business. You still have to open and close accounts. You still have to do everything, the day-to-day activities, right, to run the institution, be regulatory compliant. And then when you add any additional projects in the IT space on, you're adding to the daily workload of everybody, right? There's people dedicated to it, but nevertheless, the impact eventually will come to the deposit group, the operational unit that's in there, wherever. So understanding how much is on the plate and can it actually be digested? And people miss that marker all the time, right? Because we have to keep up with X bank or X whatever company, and you just start stacking stuff. At some point, it's the proverbial the pig through the snake. And if you visualize that, I think everybody can get it.
Yeah.
The other big point is culture. Depending on the board to a degree, the board sets strategy and I'd say are very big bumpers. But the board doesn't necessarily, through all my years, can impact culture, but not as much as the senior management team and the middle management. If you, from a culture standpoint, expect people to change and embrace, enhance this new technology, the culture of the company from a change management perspective has to be in place. If you do all the studies around culture, if you want to truly change the culture of a company, and the bigger the company, the harder, you're looking at least 3 to 5 years before you actually can change culture. I mean, ultimately change it. And you know culture has changed, or you have the right culture that you're expecting, is proverbially coming from another CRO, is when somebody does something and they're watching, they'll usually always do the right thing. What you really want is when nobody's watching, they do the right thing, right? So then you know you have that culture shift in place. So to me, the biggest obstacle is just the proverbial putting too much on a plate and it cannot be digested. So you'll do everything average versus doing what you really want extremely well and having the least amount of impact to your customer and to the bank itself, who need to support everything. And then understanding your culture. If you've developed a culture that doesn't embrace changes or adopting things, this isn't going to work. So those would be my two major deals after all the years of trying to make changes.
Ed, thanks for that. And you know, I'm going to invite Matt to comment on that. Ed, you talked to us about, you know, biting off more than you can chew and focusing on culture. And given your vantage point coming in from a board or a C-suite's perspective, Matt, I'd love for you to respond to that or add to that from your perspective in terms of, you know, in your group, which is a very large group and in, you know, a very critical group supporting your bank's operations. How are you actually thinking about it from an execution standpoint? And bear with me for a second. One of my colleagues at Anaptyss is pointing out to me that I was remiss at the beginning of this call not to address the attendees in terms of instructing them that if they had any questions or comments, they could type that in the chat box. It's something that the panelists and I can see, and we'd incorporate all of that in our thinking. So having said that, Matt, I'll turn this back to you and would love to hear your perspectives in terms of how you're actually addressing the execution element of the vision and direction.
Yeah, it's funny, Gil, because I actually have a meeting with my direct reports tomorrow to go through our vision and our mission statement. But before I get to that, I just wanted to echo Ed's statements around small steps when it comes to execution. When you're thinking about digital transformation, it's so important to focus on small changes and focus on that so that you can manage the change management piece of that, right? I think it's so important to think about the people and not just the process, because that's where more often than not, historically, I've seen things break down in the digital transformation spaces. You know, when you lose sight of the people, whether it's your internal customers or your external customers. So that's so very important. But just to add on to what Ed said about culture, I couldn't agree with him more. That is critical whenever you're thinking about bridging that gap between digital transformation and the execution piece of that. In my experience, great companies have an enduring sense of purpose. And I can speak for M&T right now. Our purpose is to make a difference in people's lives. Again, that going back to that denominator around customer. We're driven by helping people, and we enable our customers, our colleagues, and our communities to thrive. So that's from the top of the organization. That's the vision that's been set forth by our leadership and by our board. And one of the best ways that I found that we bridge the gap in execution is through our core values as an organization. So we have 5 core values: integrity, curiosity, candor, ownership, and collaboration. And everything we do as an organization, as a bank, whether it's customer facing or back office in an organization like mine in the anti-money laundering program, it's all centered around those core values. So when I'm looking to execute or prioritize digital transformation programs and projects, I always ask whether what we're doing is in line with our organizational purpose and our core values. And then from there, my team, we have our own mission statement and our own vision statement. And that's, like I said, that's something that we're going to be updating tomorrow to make sure that it's in line with our strategy for the next 3 years. But for me, that culture comes from the top down. It comes from that sense of purpose and those core values. And then from there, the mission should be organic.
Matt, thank you very much for that. In the context of the conversation around culture and the actual execution, right? Taking vision to operations and making those efficient. The elephant in the room there, in my mind, is talent. And Jeff, I'd love to invite you to kind of respond to this, right? From the way I look at it, a key element of managing change during a transformation journey is around talent management, right? The mortgage industry is particularly interesting just because of the fact that it's a pretty high volume, high touch, high contact industry where the customer experience is paramount. At the same time, it's often said that the turnover, right, the employee turnover in the mortgage industry is also relative to other parts of the financial services spectrum pretty high. So talk to us a little bit about what have been your experiences in reskilling, upskilling your existing talent pool. Has this impacted your approach to talent acquisition? And if so, how?
Yeah, I love the question. I think I particularly appreciate you softball lobbing Ed and Matt that wonderful question of culture. And then you pencil me in for the elephant in the room query. No, it's to be candid, I love this question. Because, when you think about talent acquisition and talent management, and when you conceptualize digital transformation, I've always maintained that there's a misconception that digital transformation and investing in human capital is an oxymoron, right? Like there's a faction of people or disruptors who think the pinnacle of digital refinement is the elimination of human intervention in the mortgage process. Or inherently, like that becomes the digital solutions ROI. I believe the peak of digital refinement represents a process where digital solutions actually better support the human contributions. So said a different way, it eradicates the wasteful work and then it optimizes the human impact. So to me, the digital transformation journey, it's enabled companies like OnQ to develop algorithms to seemingly solve the more simplified facets of the mortgage process. And then this activates a task-based workflow to better inform the human capital when and where their sphere of influence is truly needed. So when you think about that concept, this puts training at a premium for current roles and cross-training. Ultimately, organizationally speaking, our pursuit is to have a pool of fungible resources that have been trained across our operational ecosystem that can quickly and effectively impact the speed of that final decision. And we believe this approach fosters a more efficient means for expense control and allows you to see your employees as the value investments that they truly are, versus the expenditures that many disruptors and accounting departments, I would say, typically call them. And I think to kind of echo the sentiments of Matt and Ed, I think that approach toward our talent, in developing our talent and harnessing the power of those developments, I think it dramatically attenuates the risk of attrition. So we can still adopt this digital transformation and at the same time look at our human capital, invest in it, and truly believe that culturally speaking, we're promoting a narrative that'll drive the right outcome for the customers, both internally and externally.
Thanks, Jeff. You talked about the talent spectrum, right? And the challenges and leading into, therefore, what it means from a end outcome standpoint. I did lob you that difficult question just because you and I share the same barber. So there's a sense of kinship. That said, I wanted to invite Ed to talk a little bit about something I had read and that resonated with me and feeds directly into what all of you talked about, right? The change management, the culture, the molding and the training of talent. Organizational transformation and the digital strategy required for your enterprise or functional group, right, are not only a business plan with digital added in, but in effect, it is a digital operating system, a new digital operating system for your business, enabling the journey to examine and to be open to modifying most elements of your existing operating process, therefore, becomes a given, right? And in your respective roles, and Ed, I'd love for you to begin responding to this. What has been your experience in managing this change, or how would you generally advise, operating leaders today to address this?
Well, my first tongue-in-cheek would be just to go out and go to Sam's or Costco and get a big bottle of Maalox and Advil, and start from there. It all comes down to through my career, I've put in 2 commercial loan front-end systems. And that was vastly harder than being a chief risk officer. Not even a comparison on some days. And there are days I use that Advil and Maalox. Sometimes maybe something a little bit stronger at the end of the night. That aside, to me, and most companies, unless you're a fintech and you've started from new, right? If you have legacy systems, which most banks all do, and your back room, people fail to recognize and start to say, how do we actually do this and do a workflow? But more importantly, out of that, what's been standardized? Because through the course of when you implement systems, people are people, and people will figure out how to do things quicker, faster than what your system, and they do workarounds. And then before you know it, things are no longer standardized. So if you go to digitize something and it is not first and foremost that process, and I'll a little bit tongue-in-cheek for our folks if they're from Canada, the process, right? If it's not standardized, the nightmare it creates to implement something is just unbelievable, right? And it just makes it that much harder. So allowing people, when you go to do this, to allow exceptions or something to be done slightly different in a different region, right? Because, we need this because we're a little different. No, it is flat out, you standardize stuff and you need to make sure you don't waver or budge from it. Because when it comes to anything, right, implementing, not just this aspect of what we're talking about, that failure and to allow one-offs is what becomes the ultimate nightmare, and the cost that it imposes on implementing anything goes up 2 to 4 or higher times. So I'm going to keep this one a lot shorter than my most responses, and that's it. Standardization and never wavering from it.
I think that's pretty powerful, Ed. Thank you for that. Standardization and not wavering from the decisions that have been made and the path that you are going down on. Jeff, given the velocity in your industry of transactions, of actually taking a process from point A to point B, as a metric for customer satisfaction, I'd love for you to stay on the same question and respond to that. What's been your experience at OnQ in managing this change?
Sure. I would tell you collaboration is critical. There's a tendency for executives and visionaries to erect a plan, and then they just bring everybody along for the ride. And look, I think while that strategy may very well have some success, I think it undermines the value of soliciting for diverse ideas on that solution. So for us, pulling in multiple stakeholders to preside over a digital solution, that's important in managing the change. Correspondingly, prioritization of the solution integration is vital. I heard Ed earlier, talk about, crawl before you can walk, and prioritization is an amalgam of that. And I think a lot of great ideas come from those collaborative sessions that I noted. And you get all this enthusiasm around implementing these solutions, and you're at a fever pitch, and then your IT department gets a hold of it and says, Rome wasn't built in a day. Like, curb your enthusiasm. So it's like, what are you going to do first? So for us, I would tell you that creating steering committees to appropriately navigate that prioritization, that's certainly proven beneficial for our journey. And it's become a virtual necessity for ensuring we don't succumb to that analysis paralysis or a level of inaction because we have too many ideas to consider. One other critical cog to this wheel of digital change management, in my estimation, is measuring results and then communicating those results to your masses. While change, I think we would all agree it's commonplace, it is not innately welcomed by most people. Humans are creatures of comfort. So it becomes a business imperative for you to celebrate the progress and the successes of the change as a means of building their confidence and comfort with the solutions. I would even say similarly, it helps prove the organization embraces necessary change and is willing to take action. It's easy to conceptualize a great solution. Anyone on this call that's ever been at a cookout, you probably heard someone with these great ideas. And it's easy to conceptualize something, but it's harder to integrate it and operationalize it. And I think the proverbial phrase, action speaks louder than words, comes to full scale when you embark on your digital transformation and document its climb up the mountaintop. So.
No, I appreciate that, Jeff, and thank you for that. I mean, your themes of collaboration, prioritization, it's a measurement of results, and then communicating that out, right? And utilizing steering committees. I think that's. It sounds intuitive, but I will tell you from my conversations with and having worked with several clients on digital transformation journeys, how so many organizations don't focus on those things, right? It is the here and now, and this is the way we're going to do it. Matt, given the nature of what you do at M&T and the group that you lead, I want to turn the conversation to kind of the utilization, the access to and management of data, right? It's often said that data is the new oil. When you go past a successful digital transformation, or however you define successful digital transformation, every part of the business starts generating enormous amounts of data, right? Which provides intelligence for the entire enterprise. And whether these are customer experience metrics or process improvement statistics from your production facilities, How do you therefore think of the value of data your processes generate, right? In your world, in BSA, AML, so on and so forth. And how do you ensure that that's available to the broader enterprise outside of your function, right? And what's your bank's strategy of utilizing it and optimizing that?
Yeah, it's a great question, Nikhil, and it's an extremely important concept in the anti-money laundering industry. But before I get into that, I just want to make one comment on the talent management and change management question. One thing about talent management, Jeff was, I think, was delicately skirting the edges of this. One thing, speaking of pragmatism, I think one thing when you're dealing with your management team, one thing to think about in the digital transformation space is not just focusing on ROI, because I think that efficiency and effectiveness when it comes to talent is a bit of a sliding scale. And when you get more efficient and more effective, sometimes costs go up. And that's especially true in the AML space. We have, so I'm moving away from analysts that are engaging in white noise types of alert mitigation, and moving towards investigators that have more discretion, that, to Jeff's point, need to be trained better. So it's not always, at least in the risk sphere, it's not always about return on investment. So I just wanted to make that final point, but I think all of the points that Jeff and Ed raised in that space were really, really sound. But thinking about data, and I think in BSAML, as Ed said before, risk is very often a cost center for any bank. So return on investment when it comes to risk, any areas of risk, and specifically BSAML, return on investment is often really, really hard to calculate. But data and technology are also, as I said before, incredibly important from a regulatory compliance perspective. And AML more generally is also important to the communities that we serve. So whenever we're undertaking a data or technology initiative, whether it's something that's coming out of my organization or something happening outside of the bank, we try not to just focus on how we're meeting our regulatory compliance needs, but also how we can leverage the data to improve customer experience and to drive sales, right? I mean, that's why we're here, as I said. So it's not, if you just get into your silo and you focus on return on investment in the risk space, that can be very dangerous. But when you start thinking about how the digital transformation can be leveraged outside of those silos across the enterprise, I think it's a lot more of an effective approach for the organization. Think about the data that we need in AML: customer data, account data, transaction data. All of this information, when used through digital transformation, is used for other very important business processes across the bank: marketing, cross-selling, customer experience, on and on, right? So it's very important that we not just think about the importance of data merely in those silos, but we think about it more from an enterprise perspective. And we had an initiative years back around our Know Your Customer data, centralizing that data and the transaction information on a customer. It was important to encourage those other stakeholders across the first lines of defense and the business users to also understand the importance of it from a regulatory perspective, but then also think about how they may leverage that for those things I talked about: customer experience, cross-selling, marketing. So that made it a much easier pill to swallow for the organization, and helped drive that digital transformation a lot quicker than I think it would have otherwise been driven by the organization.
No, I appreciate that, Matt. And in the context of that, I mean, data is a topic we could talk about for days, right? There's literature that's now enormously available out there, but at the end of the day, it's really about utilizing that data for your specific goals, right? And I think you touched upon that very beautifully. I did want to talk about, and recognizing we've got 9 minutes left in this incredible webinar, and I wish this was a 2-hour thing and not a 1-hour thing. But I did want to talk about an area which I think has become, particularly in the financial services space, critical, right? And this is, digital tools have allowed digital first disruptors to become an important competitive force, right, across the financial services landscape. And irrespective of a B2B or a B2C context, right? A provocative but critically important question for this panel, nevertheless, is, given this panel, one may argue, and feel free to disagree with me, that you all represent what may be described as more legacy or traditional organizations in terms of how you go to market and how you serve your customers. Yet, all of your organizations continue to grow and be successful, right? Jeff, I'd love to start this off with you with a pointed and a difficult question and not a soft lob, right? When you think of on-cue mortgage, and then when you think of disruptors like Rocket Mortgage, right? Which are all digital or claim to be all digital, how do you rationalize this in your world?
Yeah, let's be clear. Those digital first disruptors are just haters. All right, I'm kidding. I'm kidding. Look, I'll say this: I think the historical nature to which mortgage applications have been fulfilled has created rich and fertile ground for disruptors to, whether it's imagine, build, test, or integrate ecosystems that'll promote a better execution. I applaud that. I think, in truth, when you think about that core question, though, I still believe the mortgage industry is still in the embryonic stages of its digital transformation. So for me, and I would go so far to say for us, I think rather than be nauseated by the disruptors' beliefs, I think you just instead create your digital transformation growth path and trust your process, and that serves as the elixir to cure that ill. And I would say further, I think collaborating and potentially partnering with disruptors warrants consideration. In this environment, there are a number of groups that have developed solutions with reputationally predictable and reliable outcomes for a variety of items, whether that's AI, OCR technologies, AVMs, digitalization of documents, enhanced data analytics, you name it. So I think rather than compete with some of those solutions, just partner and harness the virtue of their brilliance. Ideally, if it means both the internal and external customer wins, then it demands implementation.
No, thanks, Jeff. I truly appreciate that. I'd like to stay with this topic for a minute. And Matt, from your perspective, how would you respond? How would you think about M&T as a bank, thinking about this, right?
Yeah, I think Jeff's answer is the right one. That traditional institutions need to become the disruptors. That being said, I will say the world will always need institutions that successfully safeguard money. Yes, there have been many fintechs that have caused disruption in the industry, but at what cost? I can use very recent examples. Paycheck Protection Program is an example. We have very public data from the Government Accounting Office that suggests that some of the fintechs that participated and partnered with the SBA to originate PPP loans were some of the highest originators, but they by far and away generated the most significant losses from a PPP fraud standpoint. You also look at some of the other offerings from a peer-to-peer perspective or a peer-to-business perspective, and you see similar results, fraud losses. So that's something that I'm highly sensitive to. I think the traditional institutions are always going to be a point of need in terms of successfully safeguarding our customers' money. But at the same time, we also need to become disruptors ourselves. And as Jeff said, start partnering with and leveraging some of these new digital concepts to help to better serve our customers. So how do we increase speed, become more effective and more efficient, but also mitigate those risks that we're seeing out there? So as a traditional organization, I think M&T, we've been trying to figure out how to continue to safeguard our customers while at the same time take advantage of the digital transformation.
No, thanks, Matt. I truly appreciate it. Ed, we will go into our last question, but at the risk of spending just a minute more on this particular topic, Jeff and Matt spoke about it from their vantage point in terms of actually running operations today in the here and now. You see the world from the lens of your position on a board, your position in terms of having been a regulator, and have perhaps a very, very wide aperture into what's going on. how would you address that, this disconnect or this dimensionality between traditional financial institutions and disrupting fintechs?
Well, I think Jeff and Matt have made some great comments in this space, right? So to me, you've seen a couple things in the industry. There have been a couple banks that tried to do just plain digital banks. They've opened them and they've closed them. There's still some banks who've tried to go down a digital bank and then their traditional bank. And if you looked at the airline industry, there are United, whether it was United or Delta, or whatever, all tried to do a discount airline to compete against Southwest.
Great parallel.
And how many of those are still alive? And I'll let the answer is like 0, right? Because Southwest operating model, speaking of standardization, what makes them different is they fly one airplane model and that's it. Think about the leverage and the advantage they get of flying just a 737 versus United and Delta and KLM and all other airlines where they're flying different ones. The training that's needed, the mechanics that they need to be trained on all those different airlines, different bodies, right, styles, wiring. So, you know, it's hard to do. With that said, if you look, the OCC has now granted, I think now 3 charters to fintechs to be a bank. So it's not just partnering. The fintechs are now deciding we may not want to partner. We're going to go and actually form a bank. And the OCC has done that on 3 charters for fintechs. On top of it, the state of Utah, and I spent part of my time there, Utah is very unique. It has what they call an industrial loan charter. So there are a couple fintechs now who have gone in and gotten industrial loan charters. There's a mortgage entity. I'm trying to stay away from names, right, by design, that have done this. So I think ultimately the delivery system that the banks afford, most companies can't touch, and that includes fintechs. So either partnering or trying to do it on their own is the avenue to go. For banks, if they look at it on payment systems, where they used to be the industry to handle payment systems, you can't say that anymore. Between PayPal and I can just, all the other entities have taken over pretty much payment systems, right? The banks are there, but they don't own it like they used to, right? If you look at the mortgage, if you looked at about maybe I think 12 or 15 years ago, the top 32 mortgage producers were banks, right? Or subsidiaries of banks. If you look at it now, I think the top 32 are predominantly all made up of independent mortgage companies. So when I look at it, there is no doubt if the banking industry or the financial services industry doesn't pay attention, they're going to find themselves very similarly situated to the American car manufacturers, where there used to be 4, there's 3, but when the Japanese came into the United States, they were laughed at. Right? You can't compete. There are some derogatory terms made toward their cars. Who has the last laugh now?
Understood. No, I think those are incredible parallels, Ed, and thank you for pointing that out, right, in the spirit of pragmatism and real world outcomes. Gentlemen, we are at the top of the hour, and whilst I'd love to continue, I think this has been an engaging, energizing, very thoughtful discussion. I still have a bunch of questions. Like I said, had this been 2 hours, we probably would have taken all of those 2 hours as well. But let me step back and take the opportunity to thank each and every one of you for your time, for your commentary, for putting up with my good-natured ribbing, Jeff, about you and I sharing barbers, etc. And I hope we get to do this again. And I'd love to also thank our participants and attendees for listening in, and our teams here to answer questions and stay in touch and provide any more further clarifications. Thank you, everyone.